Hey guys, today we're trying something new. We're going to try to flip the classroom. We're going to show you some examples here on the board, and hopefully this will give you a reference to when you guys are having trouble, and you can come back to this video and hopefully go step by step. Chapter 9 of accounting is a difficult chapter. We're dealing with adjusting and closing entries. So if you have any issues, use this as a reference. You can watch this once, you can watch it 10 times. It doesn't matter, as much as you need to make sure that you guys understand this topic. Okay? So if we turn in our books to page 202, we are going to go through the working together section. Okay? In our book it says here, use page 8 of the journal. Okay? Journalize and post the adjusting entries. Save your work to complete on your own on page 209. Okay? So we're on 208. We're going to journalize the adjusting entries. So the first thing that we need to do is we need to center adjusting entries on this first line. Okay? Okay, so we need to center adjusting entries, and then we can go ahead and look at our worksheet and to see what adjusting entries that we need to post. Okay? So this is in your workbook on page 175. Okay, you can see here that the adjustments column that we are going to post supplies first. Okay, so we're going to list our debits first. In this case, it's going to be on July 31st. Okay, we need to list our debit first. This is going to be our supplies expense. So we're going to write supplies expense. Okay, and then we can write our supplies entry. Okay, so supplies expense was $713. So we write $713 in the debit, and we write $713 in our credit. Now we do not have a documentation number because adjusting entries serves as our documentation number. Okay, the fact that we centered this, we do not need anything in the documentation number like we would in the past. Okay, okay, so that was supplies. Go back to our working together on page 175, the worksheet. Okay, the second one is prepaid insurance and insurance expense. So we need to list the debit first. Okay, in this case it's going to be insurance expense. Again, it's on the 31st. You put the date. Okay, you would write insurance expense. Okay, and the credit that goes with it is prepaid insurance. Okay, and this amount was for $300. Again, if you look on your worksheet, okay, you're going to look on the adjustment column, and all you're going to do is journalize it exactly how you see it. Okay, so these are exactly on the worksheet. If you notice, if you take a look again, 713 was supplies for the A, that's a credit for supplies. And so the supplies expense was 713 in the debit. Okay, those are the letter A. Letter B was insurance expense and prepaid insurance. Again, write it down exactly how you see it. Okay, that is all you need to do for 9-1 working together. Okay, flipping your books to page 209. This is 9-2 working together. Again, what I'd like you to do is I'd like you to go through 9-1, 9-2 working together as we're going through this, and then try it on your own. Alright? So working together first, you get through 9-1 and 9-2, and then go back and you can do the on your own and see if you guys know how to do this on your own. Okay, so 209 in your book. Number 5, it says continue in the same journal page, so we'll continue on right here. Journalize and post the closing entries. Okay, save your work, complete your on your own on page 215. Okay, right now we are just journalizing. We will come back and we will post them when we're all done. All right. So we are journalizing the closing entries just like we did for adjusting entries. Okay, we're going to write closing entries. We're going to center it. Now, there are 4 steps to closing entries. Okay, so step 1 is an entry to close income statement accounts with credit balances. So again, we're going to go to the worksheet. It's on page 175. It's on page 175 in your workbook. Okay, we're going to close everything in the income statement with the credit balance. Okay, in this case, it would be sales, because we're going to close sales to the income summary. So again, our date is the end of July, the 31st. Okay, so we're going to write the 31st. In this case, we need to close out sales. So since sales has a credit balance, we need to debit sales to make sure that it's closed out. Okay, so in this case we're going to list sales up here. It is going to be the debit of $5,511. Okay. We're going to close it to income summary. Income summary is going to be an account that we're going to use to summarize the information, hence income summary. Okay, so we're going to close sales to income summary. And again, this is for $5,511. Okay, the second step is an entry to close income statement accounts with a debit balance. Okay, so we're still working on the income statement. We just closed all the credit balance, step one. Now we're going to close the debit balances. As you look on your worksheet, page 175, you can see here that all the debit balances are going to be your expense accounts. Okay, so we need to credit each individual expense accounts, and we will debit the income summary. As we learned in previous chapters, you list all your debits before your credits. So in this case, since we're debiting income summary, crediting our expenses to get rid of them, we will debit income summary first. And this is where students will mess up. Because there is already an income summary here, they will think that they don't need to write it again. Okay? We need to write income summary again. Okay? We need to write income summary again and list out every individual expense. Okay? So you can abbreviate here. Okay? From here we can list all the individual accounts. Okay? So the advertising expense is $821. Make sure you pick out the right line. Insurance expense is $300. Miscellaneous expense is $347. And so supplies expense is $713. Okay? We total these up. That is going to be the amount that we're going to debit to income summary. Okay? So it should be $2,181. Okay? So that was the second step. First step, close everything with the credit balance, should be sales. Second step is to close everything on the income statement with the debit balance, and that would be expenses. Okay, so we'll credit each individual expense to make sure it no longer has a balance. We'll get to that when we post. Alright, so the third step here is we need to, it's an entry to record a net income or a net loss to the income summary. Okay, so if we have a net income, our revenues should be greater than our total expenses. Okay, so income summary would have a credit balance over a debit balance. You can see here that this is going to be bigger. Okay, if we were to have a net loss, that means we would have spent more money, we would have more expenses, okay, over our revenue that we took in. Now, in this case, we are going to have a net income. Okay, revenues would be greater than our expenses. So again, the third step is an entry to record net income or a net loss to close income summary. All right, so if you look in your books, you can see what the worksheet has for a net income. The worksheet will already tell you that we had a net income. Okay. Again, looking at the worksheet, it would be $3,333. So we know that answer. Okay. The other thing you could do is you could take $5,511, okay, minus $2,181. Okay. You'd still come up with the same answer. So it's good to double check your work to make sure you have the right numbers up here. All right. So we are going to get rid of the net income or a net loss to the income summary. Alright, so the first thing we need to do is we need to put the date, so it's the 31st. Okay, so we're getting rid of income summary, so we're going to write income summary here. Now, if this was a net loss, you would have to debit capital because our capital had gone down. Again, a capital is what our business is worth. Okay, so again, if we lose money in a fiscal period, we need to subtract from our capital because our business is no longer worth as much money. In this case, we made money, so our business is worth more, so we will credit capital and debit income summary. Okay. In this case, we'll debit income summary for $3,333 or $3,330, or credit capital for $3,330. Again, these two right here, okay, are both income summary. They will add up to our $5,511. Okay, these two together will add up to this to cancel it out. Okay, so we no longer have a balance left in income summary. Okay, so that is step 3. Step 4, okay, is an entry to close the owner's drawing account. Okay, so we need to get rid of the drawing account, just like we did on the balance sheet. Okay, we added the net income, subtracted the drawing, Okay, we need to do the exact same thing to the capital here. We got to take that out of the drawing and put it, see how it affects the capital. Okay, and so in this case, drawing has a debit balance, so therefore we need to credit drawing to cancel it out. So we'll credit drawing, debit capital. So this would be, oh, I need to write capital right here. So this would be Darlene Wong. Okay, so the fourth step, we need a debit capital. So again, this is where students will mess up because they're writing the capital back to back. Just like up here, students will think since they already have income summary, they don't need to write it again. Okay, yes you do. You have to write it twice. Same thing down here. You're going to have capital 2 times in a row. Make sure that you write it. Okay, so we're going to debit capital and credit drawing. And the fact that we have 3 Darlene Wongs right here, it even creates more confusion. It's like having the answer C 5 times on a test. Students think they're doing something wrong. This isn't the case. Okay, you do need to have this. Okay, I'm sorry, this should be drawing. Okay, so the drawing amount was $2,100. Now you're probably asking where I got this from. We're going to go back to the worksheet. Okay, you're going to look at the worksheet. You're going to look at drawing. And it says that the drawing account had a balance of $2,100. Okay, so again, it is a debit balance. Therefore, we have to credit. Okay, credit drawing, debit capital to get it out of the drawing account. Okay, so here are our 4 steps. Okay. Interesting thing that you can look at, and this is where students will mess up, it's kind of a nice little double check. Okay? Since there are 4 steps to closing entries, okay, this is step 1, step 2, step 3, and step 4. Okay? There are 4 steps. So you should have 4 dates for your assignment here. Okay? Same thing as we did up here for adjusting entries. Okay, there is no documentation. Same thing for closing entries. Closing entries serves as your documentation for all of these transactions. Okay, again, so let's review the steps. Step 1 is an entry to close the income statement accounts with a credit balance. Okay, sales. Okay, had a credit balance, so we debit sales to get rid of it. Credit income summary. We took it out of sales, put it into income summary. Okay. Again, income summary is going to be the account that we're going to use to summarize the information, so that's why we put it over there. Alright? Step 2 is an entry to close income statement accounts with a debit balance. Okay, so again, go back to your worksheet. All the debit balances are going to be expense accounts. So since they're all expense accounts, you're going to list them out, every single expense. Since they have debit balances on the worksheet, you're going to credit them here to get rid of them. Okay? Debit income summary for the total. Add all of them up. Debit income summary. Okay? The third step is an entry to record net income or net loss. In this case, it was a net income. We saw that from the worksheet. So the difference between these 2 accounts, or between the income summary, is $3,330. Debit income summary. Credit capital. Okay, Darlene Wong. And the 4th step is an entry to close the owner's drawing account. So we need to get rid of it. In this case, it had a balance of $2,100. So we're going to credit drawing, debit capital. Again, we debit capital because capital has a credit balance and it affects our capital negatively. So we're going to take it out of our capital to show that our capital is now worth less because the owner now has this in their pocket, no longer in the business. Okay? This is all we have for the video today. We will be posting in class, so we'll be going over that. It's a little tedious here to keep switching back and forth between our general ledger where we're going to post to. So we will do that in class. I hope that this exercise here has helped. If you need to watch this again to review it, please do.